Welcome to the Market Monitors. This week, Wall Street got hit with one of the most dramatic reversals we've seen in decades. Let's get right into it. Gold and silver had been on an absolute tear heading into last week. Gold hit a record high near $5,600 an ounce on Thursday, January 30th. Silver ripped past $120, its strongest run in decades. Then, in the blink of an eye, it all came crashing down. On Friday, January 30th, silver plunged over 30%, its worst single-day drop since March of 1980. Gold fell more than 12% in a single session. By Monday, gold had dropped over 21% from its highs, and silver had given back more than 40%. So what triggered the sell-off? President Trump nominated former Fed Governor Kevin Warsh to replace Jerome Powell as Federal Reserve Chair when Powell's term ends in May. Markets took that as a signal that central bank independence would be preserved, which strengthened the dollar, and the buy gold as a hedge against chaos trade started unwinding fast. On top of that, the CME Group raised margin requirements. Gold margins went from 6% to 8%, silver from 11% to 15%, which forced highly leveraged speculators to liquidate positions, turning a correction into a crash. Now here's what's interesting for investors watching the bigger picture. While precious metals were melting down, the broader stock market had its own wild week. Software stocks continued getting hammered over AI disruption fears. The Nasdaq fell over 1.4% on Tuesday. By Friday, the Dow hit 50,000 for the first time, and the S&P 500 rallied 2% as buyers stepped in on the dip. Meanwhile, the Fed voted 10-2 to hold rates steady at 3.50% to 3.75%. No surprise there. But all eyes are now on Warsh's Senate confirmation and what his leadership could mean for the path of interest rates going forward. Here's the bottom line. Last week reminded us that the market can take away gains just as fast as it gives them. Gold and silver aren't dead. JP Morgan still has a $6,300 gold price target for year-end. But if you were late to the party, you felt real pain. Stay sharp, stay informed, and we'll see you next week on the Market Monitors.